What's cracking, everybody? It's the first video back since I got my computer fixed. And I'm going to make it pretty brief and short. But before I get into things, I want to start off by saying that I'm going to be starting a $1,000 account. And the point of that is that I'm going to be taking trades in that account, not necessarily daily, but I'm going to be doing it on the live stream. And I'd like to grow that small account live in front of everybody. Just so that, we can just start somewhere, I think it'll be a fun little challenge. And I don't want to risk a lot of money trading when I get back into things here. So $1,000 is what I'm comfortable with losing if I am wrong about every single trade that I make. And that's where we're going to start. But with that being said, I don't want to waste a lot of time. I'm just going to give my thoughts on the market. And today was actually a pretty substantial day by the looks of it. Like, daily candles have dramatically changed over the last 24 hours. Like, these daily candles are much different than they were sitting before. So let me just start off with the SPY. The SPY right now, to me, is setting up what looks like a really nice inverse head and shoulders opportunity. You've got a left shoulder here, you've got the head, and you've got what could be a right shoulder forming out if we get a pretty massive rejection at the level that we're at right now. Now, we're not necessarily going to get that. I think there's definitely still some room to run here. Like, if I was to pull up the RSI on the daily, we're sitting at 57, which is not as high as it has been in the past. We've certainly been higher. Like, you've seen 70 in the past, and when we were at 70, we were way up here at 607. This really wasn't even a super extended run, but if you were to compare it to, starting from down here, it could have been. So you definitely could see some more sauce out of this move before we do get a pullback. The true neckline to me on the SPY is probably about here, at that 575-ish level. What I would have liked to see more would have been a break of this bull flag up to the neckline, followed by a sell-off down to this 550-ish level, the former right shoulder, to then bring us back up to probably all-time highs. But it's not looking like that may happen, the way things are sitting right now. This daily candle isn't as ugly as it could have been, but this is not what you want to see when you're testing a breakout, right? If you were to look at this little run we've got right here, you've gotten an impulse up, you got a retrace down, you got an impulse up. Now you've gotten a retrace into what looks like a bull flag. And what I wanted to see was another move up to this 575 level, followed by, maybe something like this, right? A little head and shoulders leading us into this level right here. But, we got to play the levels. We got to take things a day at a time and just play the chart as it's sitting. And right now, what this looks like to me is a failed bullish move. The most bearish thing that I think you can have is a failed bullish move, and the most bullish thing you can have is a failed bearish move. And what I mean by that is this is a very clear bull flag to me, right? You've got a tightening and condensing of price action. It's forming up a wedge. You gapped out of the wedge. You retested the wedge, right? This is a very nice little gap, touch, go. But you just didn't get the follow through on this, right? You got a very harsh rejection off this 567 level. So for bears, what I think you're really looking at right now is, okay, the bulls tried to break out of this flag. They didn't get it. If we were to look at the intraday, the volume was there for this push, but then it dried out. We were just dancing around in here. Not a lot of volume, not a lot of follow through above this 567 level. You really would have liked to see this volume continue to push higher as we continued up to 575, but you didn't get it, which is making this look a lot like a failed breakout. And there's nothing more bearish than a failed breakout to me. It's just a failed bull flag breakout. So what I would expect now, based on that, is probably to come back down and retest these levels at 557 way down here, which is a decent drop. That's like a $7 move. If we end up coming back down here, we're not going to come back down there first. Like, the first spot that I would probably be watching would be this support resistance flip right here at like 562. This has acted as resistance multiple times, rejected here, rejected here. It's acted as support here, rejected here, rejected here. You get the point, right? This has been a level that's been respected very well. So I think first you're looking at a retest of these intraday lows from today. But if that can't hold, I would expect us to probably come back down and look for some buyers down here at 556, which, if we were to zoom back out on the daily, is right around that right shoulder area. To me, that makes a lot of sense. I could see that being the case. Now, if you're a bull, what you'd like to see is this is some sort of bear trap, right? You're looking at bears are looking at this like, oh man, the bulls failed this bull flag, and let's just rip it down. And you catch them on something like this, right? It forms a head and shoulders. Maybe you got a head, left shoulder, right shoulder, and it fails and it pushes above. I find that to be a little bit less likely because you did get an uptick in volume today on the daily. An uptick in volume on a rejection candle is not really what you want to see if you're looking for continuation. You would like the consolidation to remain low volume as it was here, right? We consolidated and volume dropped off, but on the rejection, volume picked up. And to me, that's sellers stepping in. They're saying, hey, we're not ready to go above this level yet, so we're going to hang out here and push it back down for a while. We'll see if that happens or not. I don't know. I've got a couple charts that I think look good for bullish and bearish case scenarios. The bearish case scenario that I think looks decent is Nvidia. To me, this daily candle looks a lot like a hanging man. And if you don't know what a hanging man is, I've got it pulled up for you. A hanging man is typically a candle that you get at the top or the bottom of a trend, right? So you've been pushing up for a little while, and a hanging man could be a sign of an upcoming reversal or a change in trend or a change in behavior. Here's another example, right? A hanging man right here was followed by a downtrend after an uptrend. What you have here on Nvidia is a very similar look. This looks very hanging man to me. You've had a nice uptrend, right? Uptrend here, hanging man candle, and the location is very important. Whenever you're looking at candles or you're looking at patterns, you want to see how it's corresponding to levels, right? And you're getting this hanging man right at the 200-day moving average. This is a very big point to make. The 200-day acts as support or resistance very frequently. Like, it's just a level that is often respected very well. As you can see here, 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 right? You've got a lot of reactions there, and you got one today. And typically when you get a reaction, you're looking for a little bit of follow through. So you got that. It also popped just beneath this falling resistance line that you've got on Nvidia. I would have liked to see it a little bit higher up. Like, if you got it like there, I'd be like, ooh, this is an ugly look. But you didn't. And I think this is a nice opportunity for maybe a short, you know? So what I would be looking for to probably base risk for a short like this is, okay, where are some major levels that we can very clearly define as potential entries, right? Now, the best one that I see right now is 114.90. Like, if you were to, let's say we gap down tomorrow on Nvidia, and at the open you pop back up to 114.90 or 115 or whatever, and you get a 5 or a 15-minute rejection candle, I look at that as an opportunity to be like, okay, here I'm going to take a stab at puts. If we get a 15-minute candle close above, I'm going to exit. And if not, I'm going to ride this down to, what's the opposite of Valhalla? The underworld? I don't know. Probably the underworld, right? But more often than not on these hanging man candle setups, you would expect something like this. I'm just going to draw the candle. You'd expect a pretty harsh rejection or change in trend downwards. So Nvidia is probably what I would be looking at. If you don't gap down to this 114.90 level, like, let's say going into tomorrow, we hang around this range for some reason, right? We just kind of bounce around it overnight, and we're here, and you get another opportunity at this sort of pre-market high, or even just intraday high. Like, let's say you pop anywhere in this little range between 119 and 119.70 or so, and you get any sort of harsh rejection candle, I would look at that as another opportunity to go short. And where I would base my risk is, okay, if we get a 15-minute candle that closes above essentially this pre-market high at 119.80, then I'm going to exit my position. That's my stop. That is as far as I am willing to risk on my trade. So that's an opportunity that I think looks decent short. Tesla, I think, is a great looking chart for long. And I wouldn't necessarily go long where it is right now, but I think that the setup looks pretty spectacular. And there's two different routes that you can take on this. The way that I look at this chart as it sits right now is like a big George W, big double bottom, right? You've got this nasty W set up, followed by a flag underneath a major support and resistance flip. And the reason I say it's a major support and resistance flip is just that if you look at the history of the stock, every time it has touched this particular level, you've gotten a reaction, whether it be buyers or sellers. So here, pretty nasty rejection, nasty rejection, nasty rejection. If you were to back up, it even plays out here, right? You can see how this level has been respected many times over in the past. So this is just a pretty big level for Tesla. Now, the more conservative approach would be, okay, I'm not going to take calls until we get a close above this level. Like if a daily candle closed above 291.25 and above all this mess, like you don't really want to see a wick on the daily candle for it to be a clean breakout. If that happens and volumes popped up, I'll take a stab at it, right? You can play it that way. The way that I'd prefer to play it would be to take it at a discount, right? And where are you getting a discount on a bull flag? You're not getting a discount at the top of the flag, right? This is all, you're buying things for more expensive than you'd like to. You're getting a discount at the bottom of the bull flag. So what I'd like to see to play Tesla calls would be Tesla has to show some relative strength in comparison to the markets, but you see it pop down back to the bottom of this bull flag and get some sort of rejection and pop back up. And this is where you would take your opportunity at some calls. That's what I would be looking for. And that's honestly something that I am looking for to take a shot at Tesla long, because I just think the chart looks nice, man. I mean, if you look at this on the daily, if you look at this as any other chart, this is just a very clear double bottom. You pushed up to resistance. You're consolidating underneath resistance. And I think this is like a 236 retracement, which is pretty strong. Let me just pull this up. If I pull it from the bottom, I think it is. Yeah, it's basically a 236 retracement, just a slight bit deeper. You're just consolidating and flagging underneath a major resistance level. So I think that's a nice opportunity for some longs. And that's where I'd be looking to take them and be at the bottom of that flag. And what I would risk is, okay, if I take my calls here, my trade is invalidated or I exit if I get a 15-minute candle that closes beneath that flag level, right? And that's where I'd cut my losses. And if you see a candle close beneath, you see volume pop up higher than relative volume has been in the past, that's probably your sign that the trade is not going to go the way that you want. So that's how I think things look right now, man. To me, this looks like an opportunity for the market to cool off a little bit. I wouldn't take it as a major red flag, like we're going to pop back down to lows from, way over here at that 490, 480 range. I'd say far from that. But this does look like an opportunity for things to cool off to then give us another move. I would really like to see something like this, give you that right shoulder, pop back up to the neckline, maybe even creep above it, and then base, and then push for those all-time highs again. That wouldn't surprise me at all. I know this is a very news-driven and headline-driven market. It's a little frustrating. You get some really wicked, whiplashy, volatile moves out of nowhere as things sit right now. But if you're to take that into consideration, the market does not care what we think, right? All that really matters is how big money is reacting to these headlines and to the news. And overwhelmingly, it seems that big buyers or institutions have faith that deals are going to get done, and they have faith that what's happening behind the scenes is good. In the short term, like in the next 1 or 2 weeks, I think retrace is definitely possible, but the overall trend now seems to be up, right? You have broken downtrend, right? If this was our downtrend, you are not in it anymore. You broke out of it. You even retested it and you push and you're flagging, right? If we were to look at any other chart and keep as unbiased as we could, we'd say, this is a pretty nice look. This doesn't look that bad. And I think that's where we're at right now. So I want to give my thoughts. I'll try to give some more tomorrow. I work at 5, so we'll see what time looks like, but I'll do my best. All that being said, I'm back in it now. I'm going to give my thoughts as much as I can. It's going to take me some time to get a little unrusty, but hopefully you pull some value from this. I'll be streaming Monday through Friday from 9 to noon if you want to tune in. Y'all take it easy.